Russia and Ukraine are having a conflict and it's creating fear in the markets, and oil is also nearing $100 a barrel. So what exactly is going on here? Today we're going to unpack everything that's going on with the Russia-Ukraine conflict and what it means exactly for you, your investments, your quality of life, and the markets. So the simplified version of what's going on with Russia is that, in short, Vladimir Putin does not want Ukraine to join NATO.
Ни одного дюйма на восток, сказали нам в 90-е годы. Ну и чего? Надули. Просто нагло обманули. 5 волн расширения НАТО. Вот о чем речь. Ну поймите же вы в конце концов. Не мы кому-то угрожаем. Мы что ли пришли туда, к границам США? Или к границам Великобритании, или куда? К нам пришли.
He doesn't want them to join NATO because that means Ukraine will make more common allies with the Western and more democratic countries in Europe. Putin has demanded that NATO rule out admitting any new members from the former Soviet states, and he views Ukraine and Russia as brotherly nations and thinks that they should be united together.
You're my brother, Ethan.
So admitting Ukraine to NATO is a threat to Russia because it expands the NATO reach closer to the Russian border. Putin also wants NATO forces to pull back from their positions in other countries near Russia, especially to the north. So far, US and NATO have rejected this demand, but have voiced their willingness to negotiate. Now, Ukraine wants to be part of NATO because joining NATO gives them some security, and it's actually the cornerstone of its national security policy. What we have are opposing views. Russia does not want Ukraine to join NATO and expand NATO's reach, and Ukraine's willingness to join NATO is basically causing this conflict. What we end up with is having the deployment of over 130,000 Russian troops all along the Ukraine-Russian border. Now, as of a few days ago, Putin has claimed that he partially withdrew some of his troops from the border. However, the validity of this claim has been contested by the US and the UK, as they believe that the Russian troop removal hasn't actually been verified. Any movement of troops closer to the Ukrainian border is seen as a threat of war, and this has really put some fear into the equity markets back at home, as well as uncertainty around the oil market. Russia actually produces quite a lot of oil and gas. So according to the Wall Street Journal, quote, Russia plays an outsized role in global commodity markets. It exports about 5 million barrels a day of crude, roughly 12% of global trade, and around 2.5 million barrels a day of petroleum products, about 10% of global trade. About 60% of Russia's oil exports go to Europe and another 30% go to China. Russia exports around 23 billion cubic feet of gas a day, about 25% of global trade, and 85% of that gas goes to Europe. I know that I just threw a bunch of numbers at you, but basically Russia is a massive exporter of natural gas and oil. If a conflict with Ukraine leads to a decrease in the supply of oil, it would be really terrible for the already tight balance between supply and demand in the global oil markets. A sharp rise in these prices for natural gas and oil could have rippling effects on the prices of gasoline and many consumer goods, potentially driving record inflation even higher. Now, in particular, Russia has a flow of natural gas to Europe through a pipeline network that is within Ukraine. This flow could be disrupted during a military conflict, so if Russia reduces the natural gas flows to Europe or the US sanctions them, European companies would struggle to fill the gap of this lack of oil and gas. While the amassing of troops has been happening over the past week or so, the US is leading efforts to deter a potential invasion by showing that its Western allies are on board with economic sanctions. One of those sanctions is Biden's promise to thwart a new $11 billion pipeline running from Russia to Germany, known as the Nord Stream 2. Now, unlike the United States, Europe and Germany in particular have a significant dependence on Russia for energy, making them vulnerable given Russia's history of threatening to cut off gas supplies to its neighbors and sometimes actually following through. This threat to Europe's gas supply could potentially undermine the West and NATO's ability to carry out joint economic sanctions. For example, the German weaker response to Russia can be seen in the German Chancellor's quietness on the proposed sanctions regarding the Nord Stream 2 pipeline. From this other Wall Street Journal article, we can see that, quote, while Mr. Scholz has repeatedly pledged unity with the US and other Western partners, he has yet to publicly announce that the pipeline would be halted if Russia attacks Ukraine. Now, this may be because an energy shortage in the winter could be disaster for Germany, and a fear of it may weaken Germans' willingness to act against Russia. Russia's use of trade and power over supply of gas, oil, and other commodities create dependencies that give itself a strong hand. So what does this all mean for you? Well, the fears of a Russian attack have already caused gas prices across the United States to climb to its highest level in 8 years. As of Tuesday, the average price of a gallon of gas was around $3.49, which is up roughly $1 from a year ago. While the US is not a major importer of Russian oil, if the global market value of a barrel barrel of oil jumps, there will be certainly a domino effect that will eventually be felt at the American gas stations. If war does indeed happen, we could see many commodities such as oil and gas increase in price, thus also increasing the inflation rate. Now, if this were to happen, this could have a great impact on our stock market as well. The Fed may have to alter their timetable of raising interest rates and tapering bond purchases, so some analysts believe that the Fed may slow down its timeline of raising interest rates if the growing risk of war does indeed make future financial outlooks a little bit more cloudy. So while oil producing countries have been slowly ramping up their output, global oil production is still below its pre-pandemic levels and it's behind demand and consumption. Analysts do say that over the next year, several large refineries are slated to open around the world, but until then, oil prices will likely keep rising. Some Wall Street firms are actually expecting crude oil prices to hit $120 a barrel, which would break historical records. Unfortunately, oil wouldn't be the only commodity affected by war. Russia is the world's largest exporter of wheat, and Ukraine is also a major exporter of wheat. Combined, the two countries are responsible for 29% of the global wheat trade. And so with global wheat supply already constrained during the past few years, the impact on consumers could be really immediate if there is a Russian and Ukraine tension or war. So there's a lot of information about Russia and Ukraine that was covered so far, but what does this all mean for you and your portfolio? Should you worry about the tensions in Eastern Europe and oil hitting $100 a barrel? Well, there are a couple of things going on here. The first is that obviously war is not good and ultimately scary, but let's actually look at historical data to see what has typically happened. If there was a potential invasion of Ukraine by Russia, this would be classified as a geopolitical event. These events are almost never good for the market in the short term, but actually could present buying opportunities. CFRA analyzed 24 geopolitical events since World War II and actually found that the S&P 500 fell on average of 5.5% from peak to trough in the aftermath of those events. The market took an average of 24 days from the start of the event to reach the bottom, but it recouped those losses in an average of 28 days later. The CFRA strategist states that, quote, history reminds investors that surprise military and terrorist activities have traditionally been short-lived and represented an attractive buying opportunity. This is evidenced by the chart right here. You'll see that in the geopolitical events that are in this table, we see how the S&P has performed 1 month, 3 months, 6 months, and 1 year later. For example, 12 months after the Gulf War in 1991, the market was up 33%. However, 1 year later after 9/11, the market was actually down 18.4%. 75% of the time, however, 12 months later, the market returns higher. Now, this is a pretty good sign. Now, keep in mind, I'm not trying to downplay the threat of this geopolitical event or this potential war, but I'm just showing you what actually happens historically. All right, second, if oil hits $100, gas prices are going to be higher in our nation and across the globe, which definitely sucks. But more importantly, this is pretty concerning because of what it could do to inflation. If you remember from our previous videos, the way inflation is calculated is with a basket of goods compared from one period to the next. This is called the Consumer Price Index, and gas is one factor of how inflation is calculated. If gas rises, the inflation numbers could go up, which would cause a chain reaction negative effect on our markets as well that the Fed has to deal with. So this is definitely something to keep an eye on. We don't actually know what's going to happen with the price of oil, but if it does go up, then we could see our inflation going up as well. From an investing standpoint, I wouldn't be panicking quite yet about your portfolio. Ultimately, stock prices follow the company's specific earnings. During times of uncertain global events, it's important to assess if the companies that you own in your portfolio and its bottom line will actually be impacted. For example, if you own a stock like Starbucks, the effects that oil prices and military conflict have on Starbucks are going to be likely less impactful than other stocks. Ultimately, this always comes back to having a diversified portfolio. So if you own a good balance of companies across different countries and industries, major global events like the one that we're seeing unfold right now shouldn't be a major risk to your investments. I know that this video was a little bit shorter than most, but I hope that you guys enjoyed my summary on what's basically going on in the market and with Russia and Ukraine. If you guys want to see more videos discussing current events and how it affects the markets, please leave me a comment saying so, and I will see you guys in the next video. Peace.